What if certain companies didn't just survive the biggest economic storms of our time, but actually bounced back stronger, almost like they were built for it? Today, we're diving deep into exactly that question. We're zeroing in on, well, a fascinating set of Indian stocks, companies that showed incredible resilience through huge market upheavals. Think the 2008 global meltdown, the COVID collapse, even recent inflation shocks. Our mission, it's really to decode their secret, to understand why these specific companies we're looking at, 10 Indian stocks here, showed such consistent strength over the last 15 years or so. And yeah, this isn't just about scraping by. It's about, not just weathering the storm, but genuinely thriving on the other side.
And what's really interesting here is not just about the stock performance numbers, though those are certainly part of the story. It's more about understanding that deep, fundamental business strength, that stability that lets these companies stand tall when, frankly, everything else seems to be crumbling around them. We're going to explore what made them, well, what you might call bulletproof. And by the end of our deep dive today, you might just see a surprising, but actually quite consistent formula behind their success.
Okay, let's unpack this then. Before we zoom right into individual companies, maybe let's get the macro view first. When the market was really taking a beating, which sectors, broadly speaking, consistently stood tall? What was their edge?
Yeah, good question. When we looked across the data, three sectors really showed consistent resilience through every crisis you mentioned. First up, FMCG, consumer staples. It's pretty straightforward, really.
Yeah.
People don't stop buying essentials. Toothpaste, biscuits, shampoo. The demand is just there. Regardless of the economic climate, these companies aren't just selling stuff. They're like embedded in daily routines. It creates this almost unbreakable demand loop. Their revenue streams, incredibly stable, even when things get tough.
That makes perfect sense. Yeah, daily necessities are pretty much non-negotiables for households. Okay, what's next?
Second, pharma and healthcare. Again, think about it. Steady, constant demand, crisis or no crisis. When people get sick or need ongoing medication, that demand is, well, it's inelastic. These companies aren't just selling products, they're providing essential health services. And that becomes even more critical during something like a pandemic, right?
It's genuinely eye-opening seeing how these basic human needs translate into such powerful economic resilience. But IT services, that one feels maybe less intuitive as a defensive pillar. What makes them so flexible, so quick to recover, especially when other tech firms might stumble?
You're right, the idea of defensive tech isn't always the first thing that springs to mind. But think about it like this. IT services often involve long-term contracts, essential infrastructure maintenance, things like managing a company's data, cybersecurity, keeping digital operations running smoothly. Businesses can't just switch off their payroll systems, can they? Or their CRM. Even in a downturn.
Right, those are mission critical.
Exactly, mission
Yeah.
critical. So that means consistent, almost utility-like demand. That's a huge factor. Plus, they often have global reach, which spreads their risk, and their asset-light models. That allows for quick pivots and recovery. So when you tie it all together, these aren't just random trends. They show how certain industries act as really strong anchors for the whole economy.
Okay, so that demand for essentials and consistent service clearly offers a powerful buffer. That makes sense. But let's take that a step further now. We've talked sectors. Who are the specific names? Which companies within these industries really proved their mettle, became like case studies in resilience? Let's peel back the layers. Let's meet the individual players who defied the odds.
Absolutely. So in FMCG, our heroes, if you will, Hindustan Unilever, HUL, really stands out. It showed remarkable double-digit growth, even back in 2008.
Wow, 2008.
Yeah, I mean, put that in perspective. The broader market was in free fall, right? Yet HOL sales were soaring. It just proved the sheer power of their everyday essential products in a downturn.
And then there's ITC, a real behemoth. What's their secret sauce?
ITC. Well, they're known for incredibly consistent cash flow. And that's driven by a really wide product base. Cigarettes, hotels, agribusiness, paper. This diversification, it acts like a shock absorber. Helps it weather pretty much any storm. Nestle India is another one. Huge brand trust. Product diversity, think Maggi, Nescafe, Kit Kat. That brand equity means people keep buying, even when wallets feel a bit tighter.
Right. And we shouldn't forget Britannia. Their dominance in both rural and urban markets with staples like biscuits and bread. It meant even when people cut back on luxuries, Britannia products stayed on the shopping list. Almost everywhere. Similarly, Marico, focusing on hair care, health oils, Parachute, Safala, these aren't just products, they're like daily rituals for people, which means consistent sales even when other sectors are getting hammered. It's that constant everyday demand.
Exactly. Then moving to our pharma defender, GSK Pharma is a really standout example. It actually grew 11% during the 2008 crash.
Grew.
Uh,
During the crash.
Yep. Grew. And this links directly back to that constant non-discretionary demand for stability that essential healthcare products provide. People just don't cut back on necessary medicines or vaccines, even in tough economic times.
Okay, now on to the IT titans. TCS is a true veteran here, isn't it? Survived the dot-com bust 2008 and the COVID shock.
Absolutely. TCS has this incredible track record of compounded returns, meaning their growth isn't just linear, it's building on itself year after year. That creates an amazing cushion and consistent value, even when markets are volatile. Plus, their global trust means they're not overly reliant on any single market.
In Infosys, another big name.
Infosys is another stellar example, yeah. They have this long-term vision combined with what we call strong fundamentals, and that's enabled them to bounce back every single time.
What exactly are those strong fundamentals, though?
Well, at a high level, it's things like financial discipline, a really robust balance sheet, a clear market strategy. It all makes them incredibly resilient. It's part of that formula. We'll unpack it a bit more in a moment.
Okay. And Tata Elxsi, they're a bit different in the IT space, right? More design and tech services.
That's right. Tata Elxsi is strong in design and tech services, especially for industries like automotive and media. They showed resilience because their innovation in design tech think the R&D they provide is something companies often can't afford to stop, even during a downturn. It's their future competitiveness.
Okay, interesting. But here's a curveball you mentioned, a surprise entry, from the auto sector, Hero MotoCorp.
Yes, Hero MotoCorp. What's fascinating is that it actually outperformed the entire two-wheeler sector back in 2008.
Really? How?
Well, if you look closely at why, it was primarily rural demand that saved the game for them during that specific period. You see, during economic slowdowns, personal mobility, especially affordable two-wheelers, often remains a necessity in rural areas. And Hero MotoCorp had that deep, established distribution network to tap right into it. It really highlights a broader economic point, actually.
Okay, so what does this all mean then? We've seen companies across different sectors, FMCG, pharma, IT, even that surprise auto player. But what did these seemingly different companies all share? What are the common threads that made them so remarkably resilient through all these crises? Is there an underlying formula here?
That's really the key question. And yes, they absolutely share a few core common traits, almost like a blueprint for resilience. First, their products or services are either essentials-focused or mission-critical. This isn't just about selling necessities. It's about providing solutions so fundamental to daily life or, business operations that customers can't really cut back. Even when budgets are tight, that creates an incredibly sticky and stable revenue base.
Yeah.
Their demand is remarkably inelastic.
So even when times get tough, their customers basically have to keep buying from them.
Exactly. Second, they tend to have very strong brand loyalty. This isn't just about liking a product. It's that deep-seated trust and habit. It makes customers stick with them, even when maybe cheaper alternatives pop up. And that gives them pricing power, reduces customer churn, especially in a downturn.
Right, that loyalty is key.
Third, they're usually excellent at diversifying their risk. They don't have all their eggs in one basket, whether that's through diverse product lines, different global markets, or varied customer segments. It means if one area takes a hit, the others can act as a cushion.
That's smart. Spreading out the potential impact makes sense.
Fourth, and this is crucial for financial health, in a crisis, they consistently maintain clear, strong cash flows and low debt. This is paramount. It means they're not reliant on external borrowing when credit markets suddenly freeze up. That gives them incredible flexibility and resilience when others are just struggling to stay afloat. They can sustain operations, maybe even invest, while competitors are just trying to survive.
That financial health is critical.
Absolutely. And finally, many of them have both strong rural and urban reach. This broad market penetration provides incredible stability because, well, economic downturns don't always hit all demographics or regions uniformly, do they?
Yeah.
Like we saw with Hero MotoCorp, that rural demand can be a surprising savior.
So that's the formula right there. It's not about hype or some complex financial trickery. It's just solid business foundations, a deep understanding of what makes a business truly indispensable. It's actually quite thought-provoking, seeing how these fundamental principles, when applied consistently, lead to such different outcomes during crises. I mean, it really makes you rethink the whole idea of safe investment sometimes. It's not always about what's trendy, but what's fundamentally indispensable.
Right. Crashes will come. That's not really a question of if, it's more when. So the real question for you, the listener, is, are you studying the companies that keep bouncing back? Are you looking for those underlying patterns of strength? Because at the end of the day, patterns don't lie if you know where to look.
And just to reiterate, this deep dive today was purely for educational purposes. No stock is being recommended here. We're only decoding what made these companies tick. We hope this exploration has given you maybe a fresh perspective, perhaps a new lens to view market resilience through. Stay curious and keep diving deep into what truly makes companies work.